The Dow returned over 414 times your money in the last 100 years. With a few simple trades, I'm going to share with you how you can turn that 414 times into 3,600 times. So stay tuned. Hi there, and welcome to the Forex Collective. My name is Brian and I'm a Forex trader. I have this YouTube channel where I upload tutorials on Forex and share some of my analysis on that. I also run a subscription service, so please look at my past videos to see my performance. And if you have any questions on that, find my email below and shoot me a message. So let's just get right into it. So ratio trading, what is ratio trading? Okay, so if you think about any sort of cycle, sine waves or frequencies, anything in nature, everything goes up. Stock market goes up and down and up and down and up and down. And we find these relationships between certain things, like the Dow and gold, or gold and silver. They usually go opposite of each other sometimes, and that's what we're trying to incorporate into our investing strategy. It's a very simple strategy to do. When it gets to extreme, you switch. When it gets to the other extreme, you switch into the other investing class again. It's as simple as that. So I'm actually extremely shocked at the numbers that I'm going to share with you soon on the screen. It was, I knew the ratio trading was good. I didn't really realize how good it was until I put pen to paper and figured it out. So let's just, I'm going to share some charts on the screen, share some math and numbers behind it, and go from there. Okay, so what I have up on the screen is a 100-year price chart for gold. All these gray shaded areas are the recessions. So first thing to note is, like any other commodity in a recession, despite gold being a safe haven, it will correct down. And that's because everybody's coming out of stocks, everybody's coming out of all the investments and just going into cash. Cash is the safest, so money gets pulled out of everything. And when everybody wants money, that sends the dollar up. And of course, gold and other things are priced in money, or priced in US. So when the US dollar goes up, it brings the price of gold down. Okay, so a couple things to note. Back in 1915, gold was at $19. Today it's at $1,529. So that is 79 times your money. So if you put in $100, you would have $7,900 right now. But we can see that it's it's parabolic a lot of the times. Steady, steady, boom, up, steady, steady, boom, up, steady, steady, boom, up. Okay. Same with silver. So silver was 50 cents 100 years ago. Today it is around $14.76. So that's 29 times your money. So not as good as gold. Gold was 79, silver is 29. So $100 would have turned into $2,900 with silver. But again, the same thing. Up, 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 and then boom, parabolic up, and then steady, steady, boom, straight up, right? With ratio trading, these are the parabolic curves that we're trying to, I guess, capture and get on, right? So here's the Dow. So the Dow was $55 over 100 years ago. Today it's at 2,200 or 22,800. So that's 414 times. So remember, gold was 79, silver was 29, Dow is 414, and you say, wow, I should just always put all my money in stocks because that is the place to be in. Well, that's true, but at times in these macro cycles, in a 100-year cycle, the Dow isn't always the best performing class, and gold isn't always the best performing class, and you want to take advantage of these parabolic swings to get the best returns. So now if I go to the Dow gold ratio, so what this is the price of the Dow in the year divided by gold in that year. So we can see that back 100 years ago, the Dow gold ratio is 3.7, and now it's around, what is that, around 18. Okay, but we can see that there's these extremes. So anytime we're around five or six or under, that is an extreme low. So in those times, we want to be in stocks. When it's over 25, that is when we want to start switching to gold or silver, depending on what the other ratio tells us, okay? And of course, the other is gold-silver ratio. So exact same thing, anytime price is below 30, that is when we want to be in gold. Anytime price is above 80, that is when we want to be in silver. And right now we can see that we're in an extreme gold silver high, which means all of our money should be in silver and not gold if we're trading commodity or precious metals. So right now I'm going to share with you some math on what kind of results a person could expect by using some of these ratios in your trading. And I encourage you to take these numbers I'm going to read out and go to macrotrends.net and do this math for yourself and double check it, okay? So just to recap, so $100 in gold would have turned into $7,900, 79 times. $100 of silver in the last 100 years would have turned into $2,900 or 29 times. And $100 into the Dow would have returned 414 times or 41,400 times, okay? So let's start with the Dow gold ratio. So you can see, if you look at that chart again, the Dow gold ratio would have happened twice in the last 100 years. So it doesn't happen very often, but when it does, you need to jump on it and capitalize, okay? So in 1964, let me go to the Dow gold ratio chart. So in 1964-ish, that's when we hit 25, and that is when we would have switched out of stocks and went into gold. So stocks up until that time would have returned 14.5 times. So your $100 at that point would have turned into $1,400. And then in 1974, that is when we got below 5. So that is when we would have switched to stocks. So at that point, between 64 and 74, you would have got another 4.4 times your money by being in gold. So now your $1,400 has turned into $6,300. Okay, and now we ride this wave until we hit 25 again, and that's 1997. So in 1998, we would have switched again into gold. We would have returned 11 times our money from 1974, and we would end up at $70,000. 1998 to 2011, we would have been holding that gold and returned 4.3 times our money. So that 70,000 would turn into 300,000. And in 2011, we would have went all into stocks. And then stocks from then until now, we would have returned 1.85 times our money, and we would be at $556,000 or 5,600 times our money. So you can see that original return of the Dow only of 414 times is completely blown away by using the Dow gold ratio, using the ratio 1, 2, 3, 4 or 5 times, and instead of having 41,000, we would have 556,000. So that's insane. It's a ratio you need to be using in your trading right now. If I look at the gold silver ratio only, if we only traded gold and silver, in 1916, the 30 ratio meant we should have been in gold. Gold until 1931, so we would have gotten 1.15 times our money, or $100 would turn into 115. 1931, we would go into silver and hold silver till 1963, and we would have gotten 4.4 times our money. So 4.4 times 115 is $500. 1963 to 91, we would have held gold, gotten 10.9 times our money. So now our cash would be at $5,590. From 91 until 2011, we would have been in silver. We would have got 9.6 times our money, and our account would be at 53,000. 2011, we would have switched to gold till 2019. We actually would have lost 7%. 2019, we would have switched to silver and would currently be holding silver. Now keep in mind, this ratio trade isn't done, but it's currently down 10%. So we would have been at $46,000. So 46,000 is actually still higher than the Dow's 414 times that I spoke of. Okay, so ratio trading is very powerful, especially if you want to keep silver and gold as part of your trading strategy, which I encourage for many other reasons, which I'll have future videos on that soon. Now, the fun one, okay? Dow gold silver ratio. So we do the Dow gold, but when we switch to gold, we look at should we be in silver or gold at that time, okay? So Dow in 1915, we would have had, that Dow was at $55. In 1964, we would have switched to gold. Just a sec here. In 64, we would switch to gold. We would have 14.5 times our money, so we'd be at $1,400. From 74, we would have switched into stocks, and we would have had 4.3 times our money. So our $1,400 would be at $6,300. From 74 to 98, stocks would have went up. We would have got 11 times our money. So in 1998, we're supposed to switch to the Dow, or the gold, gold. But then if you look at the gold silver ratio, we should be in silver at that time. So in 1998, we would have sold all our stocks and put it into silver. Okay? So now, right now, we own silver at $70,000. Okay? So in 2011, silver was at $40. So we would have gotten 8 times our money. So our $70,000 would have turned into $560,000. But of course, in 2011, we were supposed to switch into gold, and then gold into stocks. So in 2011, the Dow was at 11,600. It's currently at 22,800. So that's pretty much 2 times our money. So our 560,000 would turn into over $1 million. Okay, so that is an insane amount of return. Okay, considering just holding the Dow alone would have returned, 41,000. This strategy with like 5 trades, easy trades, swing trades over decades, you'd get over $1 million. Okay, so what is that? Let me just, 1.1 million divided by 41,000, 26 times what the Dow would return. Now that is incredible. Now, if you want to look at how to do that in your portfolio, please shoot me a message. Join my subscription service. I share all of this information on how to actually do it, where to buy gold and silver, what are the best ways to do it within my subscription. So I hope you enjoyed this video. I'm going to have more on Dow, gold, silver in the coming weeks and months. So again, hit the subscribe button and I will see you next time.